Good afternoon, ladies and gentlemen. I'm here to provide the health and safety talk quickly. Kindly note, we're in an area where there is no smoking allowed, so please no smoking allowed in this area. Also note, with regards to COVID-19 regulations, please adhere to all COVID-19 regulations. Wear your mask at all time, and you will see throughout the venue there is hand sanitizers, so please also sanitize your hands. In case of an emergency, we do have personnel on site which will direct you to the safe route. And also when someone gets injured, we also got a first aider on site. You must enjoy the rest of your afternoon. Thank you.
Good afternoon. Let me remove this. Good afternoon, ladies and gentlemen, and especially to my colleagues and co-workers at SARS, and especially those who have joined us with their virtual presence, as well as members of the media. I would like to bid you a warm and friendly welcome in joining us today for our results announcement. A year ago, seems like in one sense so long ago, and in another sense like just the other day, when we met similarly to announce the revenue results of 2019-20, we had just come to terms with COVID-19 and the consequent initial lockdown of 21 days and how that impacted on our lives. Today, a year later, we know more about the exact nature and extent of the pandemic. We've experienced severe economic contraction, but more importantly, we have more than 1.5 million positive cases and sadly have had to take leave of many, many loved ones over the past year. People close to us, friends and family. We have not even begun to count the impact of the emotional and psychological impact on the nation, our fellow citizens. It is still untold what that damage and impact is. But what we do know is it has transformed the lives irrevocably of many families. Thankfully, ordinary South Africans have adjusted their way of life to wear masks, maintain physical distance, and have significantly stepped up their daily hygiene routines. It is against this extraordinary backdrop and significant challenges on all fronts that we make the tax revenue result announcement today. At the outset, I'm also thankful that we are joined online by our Minister of Finance, Mr. Tito Mboweni, the Deputy of Finance, Minister of Finance, and some of our National Treasury colleagues. Let me start by reflecting on the economy. COVID-19 has resulted in a severe contraction in both economic growth as well as tax revenue. It has also resulted in unprecedented uncertainty in predicting economic growth and tax revenue around the world. This is confirmed when we engage with our colleagues in the OECD and ATAF member countries. Our own experience in South Africa reflects the same trend. In February 2020, the Minister of Finance set a revenue estimate for SARS of 1.425 trillion for the financial year that ended yesterday. Due to the economic impact of COVID-19, the Minister of Finance adjusted this number downwards, initially by 304.1 billion rand in June 2020, and again to 312.8 billion in the October medium-term budget policy statement. These adjustments then set a revenue estimate for the South African Revenue Service of 1.113 trillion rand. In the third quarter of the financial year, due to a better than expected economic recovery, as well as an improved revenue collection effort, the Minister in his February budget statement announced an upward revision of 99.6 billion, almost 100 billion more, thus setting a full year tax revenue estimate of 1.212 trillion. Against this estimate, I'm extremely happy to announce a tax revenue result of 1.250 trillion rand, which exceeds the February estimate by 38 billion rand. Stated otherwise, we have reduced the October revenue estimate of under recovery from 312.8 billion, as expressed in the Minister's budget statement, to 175.2 billion. This means that SARS reports an additional 138 billion as a result of the slightly improved economy and a focus on compliance efforts for the year. Within the context of the economic contraction, the revenue reported year on year is down 7.8%, but represents an improvement of 3.1% against the revised February estimate and 12.3% improvement against the October MTBPS estimate set by the Minister. The significant contributors in this regard to the positive revenue performance reported against February estimate are as follows. Personal income taxes are up 4.2 billion or 488.6 billion collected, which is a 0.9% improvement from the February estimate. Corporate income taxes is up 11.7 billion, meaning a collection of 204.7 billion rand, or a 6.5% improvement against the February estimate that's set by the Minister some 6 weeks ago. Value-added tax is up by 6.1 billion, collecting 330.7 billion, or 1.9% up from the February estimate. Import duties are up by 2.2 billion rand to 47.4 billion rand, or 4.9% up from the February estimate. And domestic specific excise is up 7.4 billion, collecting 32.3 billion, or 30.7% up from the February estimate. The above positive performance is a result of some economic improvement, as well as the focused collection efforts borne out by the rebuilding and the restoration of the capability and integrity of SARS. From an economic perspective, companies in the mining and financial services sectors performed better than expected, as well as the pent-up trade demand from the first half of the year were caught up in the second half of the year. This was offset by a higher than expected refunds across all taxes, the net loss of employment, lower wage increases and bonus payments. Industries that also contribute to excisable products had a net year-on-year decline in revenue across all taxes of 21 billion, or 33% down, which includes 14 billion under recovery from the tobacco and alcohol products. A detailed view is included in our media briefing pack and will also be available on our website. Let me now turn to the performance that underlies this achievement, because in a way we are also accounting to you for the work that we do at SARS. And bear with me as I take you through some of the detail. When we think about the tax revenue management system at SARS, and we had previously reported that we distinguish between the revenue that we receive, voluntary from taxpayers, and the revenue that we have to collect through the administrative actions that we impose, and that yields the additional revenue. We refer to this as our compliance program. This approach recognizes that revenue performance is dependent on three interrelated factors. Firstly, economic conditions and tax policy. This sets the revenue estimate. Secondly, the administrative effort by SARS or our compliance program. And thirdly, the overall compliance culture and tax morality of our society. In a perfect world, when these three factors work well together, we would achieve an optimal tax revenue outcome. Given that we have experienced a significant shock in the economy and are still struggling with low levels of tax compliance, the administrative actions by SARS is critical to achieve the best possible revenue outcome. I would like to touch briefly on the key administrative actions that underlie the revenue result that we announced today. Firstly, the administrative effort by SARS. It is too early to declare victory, and we are the first to admit that we still drop the ball far too often. We are encouraged, though, at the progress we experience as several pockets of efficiency emerge. In addition to our new organizational arrangements, there is a renewed focus on our compliance program, which directs us to specific aspects of non-compliance and criminal activities. I would like to share with you some of this progress and the impact it has had on the revenue outcome we report today. Firstly, improving general non-compliance. And this includes non-filing when you ought to file, non-registration when you ought to register, non-payment or underpayment or late payment. And the early successes I report today are as follows. In terms of new registrations, we have expanded the tax base significantly. We have added 1.6 million new registered taxpayers, mainly in pay-as-you-earn, VAT, and personal income taxes. This has yielded 5.8 billion in tax payments. We have paid out 1.47 billion in refunds to these taxpayers, or a net revenue from this additional taxpayers of 4.4 billion rand. And you'll find the breakdown in the pack that we will provide you. Then we focus on overdue payments and outstanding income tax or VAT or CIT or other returns. Here we have processed 1.626 million cases. We've made over 370 telephone calls and sent out 327,000. So that's 370,000 telephone calls and 327,000 text messages to non-compliant taxpayers. Maybe some of you received such an SMS, but I'm sure none of you who are in the room today will have received such an SMS. The outstanding debt that we have collected as a result of this effort amounts to 63 billion rand, of which 12 billion is from large businesses and the other taxpayers contributing to 51 billion. We have also finalized 1,222 applications to our voluntary disclosure program, and this has yielded 3 billion rand in cash collected, But encouragingly, it has also prevented refund leakage of another 1 billion rand. We have invoked and finalized 16,800 under-declared provisional tax payments. So when companies who are provisional, or individuals are provisional taxpayers, they have to make an estimate of their tax due. And if that estimate is too low, SARS, in terms of paragraph 19.3, is then permitted to invoke an additional tax payment. We have done so for 16,800 taxpayers, resulting in an additional 16 billion rand, 11,500 of these large business taxpayers, and just over 5,200 of these from the small, medium business segment. Then from our specific audit and investigative work, we have raised a number of additional assessments arising from the following phenomena. And some of these I share with you as a concern. We have seen numerous instances of incorrect and unsubstantiated claims, which includes underdeclaration of income and overstatement of expenses, and also just underdeclaration in total. And some of these may involve fraudulent claims and fictitious invoices. Increasingly, we are also reconciling invoices on turnover and deposits in bank statements to VAT declarations, and are detecting significant instances of mismatch between various declarations. So the turnover declared in a income tax declaration is different to the turnover declared in a VAT declaration, suggesting fictitious invoices, invoicing carousels, and even consequently fraudulent refund claims. Similarly, we saw companies declaring a certain level of turnover, which is, as I said, mismatched between various returns. And therefore, the integrated view of a taxpayer's financials increasingly is important for us to ensure that the tax liabilities that are due are appropriately paid or collected. We've also detected and intervened in several instances of IRP 5 certificates. This is the employment, the certificate that employer gives to an employee that reflects the income that they've earned and the deductions through the payroll. And we have noticed a number of these are inappropriately or fraudulently issued by non-compliant employers, employers who are either not registered or who should not be deducting tax to individuals in respect of personal income tax deductions. Many companies continue to declare losses for extended periods. We are focusing increasingly on this and have established a specific project focusing on assessed losses, resulting in numerous income tax refunds that we have reversed. That's just under the area of general compliance improvement. Then we turn to some specific practices which we categorize under tax avoidance. And with our renewed focus, we have looked at a number of areas. Firstly, under the refund leakage protection, as we continue to extend the use of data, employing machine learning algorithms and artificial intelligence, and using technology as an enabling platform, we will not only improve our engagement with honest taxpayers to make it easy for them to comply, but we are also expanding our capability to present a credible threat of detection and to make it hard and costly for negligent taxpayers who either negligently or aggressively or even fraudulently and criminally seek to defraud the fiscus. As a result, we have detected and finalized 1.63 million instances of refund leakages and debt equalization, preventing an outflow of 57 billion rand. Of that, 44 billion would have been unlawful refunds, and about 13 billion of that would have been paying a refund to a taxpayer who owes us money. And so we hold on to that because of the debt equalization activity. Then in terms of our customs area and aspects of non-compliance, our response in this area to illicit trade have resulted in more than 4,500 seizures of illicit goods that includes counterfeit products, illicit cigarettes and alcohol, rhino horn, and even prohibited COVID-19 medicines such as ivermectin. Taking into consideration the impact of COVID-19, there was a reduction of trade over the first half of the year, and therefore the ongoing restrictions of traveler movement have impacted on the overall outcome. But even under these circumstances, the revenue protected through these efforts amounts to 2.5 billion rand, and in addition to this, customs have collected a further 2.6 billion from customs contraventions that include misclassification of goods, duty evasion, undervaluation of goods, and rules of origin infringements. So a rule of origin infringement is where a taxpayer takes advantage of an area that is allowed to have a duty exemption, imports a product from an area that is dutiable into a non-duty area, and then simply adds on a label made in this particular country, but actually the product is made in another country. And so rules of origin infringements is a huge risk to us, and now especially with the Africa Continental Free Trade Agreement, that risk is an amplified risk for us. In terms of imported services, taxpayers are subject to paying VAT when goods and services are acquired from VAT vendors. We've commenced a project, and we started at home. Our initial project focuses on government departments who imports projects, and we look at their compliance with the VAT Act, and in particular with regard to the acquisition of electronic services from non-resident providers. To date, from this initial project, we have collected 111 million, and we will continue to engage with all affected stakeholders and expand this project to the entire tax base. Secondly, we have also registered 19 non-resident entities thus far, and are continuing to engage with those who have been identified, particularly where VAT registration is concerned and a liability therefore exists, and working in regularizing their VAT affairs, and we expect additional tax revenue will flow from that activity. In addition, we have also improved our identification of non-resident e-service suppliers who have received payment from South African customers. You may also recall that we have recently invited taxpayers to disclose the acquisition and or trading of so-called crypto assets. And then our ongoing efforts on transfer pricing and international taxes continue to raise a concern of companies utilizing base erosion and profit-shifting practices. These are focus areas in the re-established large business and international segment and will be extended across the other segments. When we make an announcement shortly in terms of the Davis Tax Committee work, we will provide more insights of the work we will focus on in the coming year. Then under criminal and illicit activities, we are aware of ghost employers and employees. Over the years, we have seen a steady increase in the number of submissions from ghost employers who file returns without payments or who file returns without employees in the hope of getting pay-as-you-earn refunds. In the tax year past, we saw 3,435 employers who have submitted more than 77,000 employee certificates, IRP5s, amounting to 2.5 billion refunds, which we have detected and are in various stages of investigation. In such cases, these individual taxpayers would submit their returns, where they are real individuals, claiming a refund because they naturally have contributed, but because the employer have not handed over, we then have a double whammy. We have an under payment from the employer, and then we pay out a refund to an individual who have legitimately fulfilled their obligation. And so increasingly, the focus on pay-as-you-earn compliance will be on our agenda. In terms of criminal and illicit enforcement actions, we are cooperating with a number of commissions of inquiry, Zondo and others, and also with law enforcement agencies as they investigate claims of state capture and other areas of corruption and integrity concerns. Compliance efforts so far includes illicit financial flows and illicit trade interventions. I can report the following. 780 preliminary investigations have been finalized. The focus areas include fuel, tobacco, alcohol, clothing and textiles, leather and footwear, as well as VAT carousels. This is a fraudulent activity where goods are declared for export, thereby claiming the VAT, but actually do not leave the country at all, or leave the country simply to return with collusion of third parties. Areas where this manifests specifically, across the board, but specifically in the gold sector, in the phoenixism, where VAT companies are created for no other reason but for the express purpose to defraud the VAT system. There are examples of abusive liquidation practices and business rescue practices. Obviously, there are illicit financial flows which often manifest as the overstatement of the value when taxpayers apply to the Reserve Bank for advanced payments on capital goods or services that they import, inflate the value, and then when the customs declaration is filed, there is a differential between the actual value that flowed out and the value of the goods flowing in, and the difference effectively is an illicit financial flow. Then clearly we still are concerned about various instances of tax evasion and money laundering. In terms of state capture cases, we currently have 7 projects comprising of 85 civil and 58 criminal investigations. 7 civil and 32 criminal investigations have been finalized, and 27 of these are currently with the National Prosecuting Authority. We have been successful in securing 9 preservation orders with an estimated asset value of 5.5 billion rand. 5 search and seizures operations have been concluded. 2 tax inquiries have been completed into illicit financial flows and related focus areas, and 1,445 illicit trade interventions, 16 detentions, and 45 seizures have been conducted with a combined value of over 300 million rand. Interagency working group have been established on illicit trade, specifically in the gold sector, and we have 17 criminal investigations with SARS that by our estimate has a prejudice of 926 million rand, and 42 cases are currently with SAPS and the NPA, where we estimate the revenue prejudice to be 8.5 billion rand. Then this year, we introduced accelerated procurement of personal protective equipment, and sadly, we have let ourselves down as a society by the number of corrupt, fraudulent, and otherwise irregular procurement practices. In April 2020, when we commenced a project to identify non-compliant taxpayers who supply protective equipment, personal protective equipment to government, we have noticed a number of irregularities. The results of this work to date, which is still ongoing, is that we have collected In undeclared revenue, 135 million rand. We've reduced refunds by 47 million rand. We have invoked paragraph 19.3 revenue of a further 23.5 million rand. We've obtained preservation orders of 88 million rand. 278 of these taxpayers who were not registered for VAT, and we have registered them, some as far back as 2017. 156 taxpayers were investigated for ITAC VAT exemptions that have been unduly claimed, and 30 politically exposed persons have been identified, and we are at various stages of investigating that. We've also seen encouraging success with criminal convictions, and we've had a number of notable prosecution successes resulting in lengthy jail sentences. We have seen most criminal cases relate to syndicated VAT fraud, and in the past year we have had a few significant convictions with jail time in excess of 10 years each. There's an increasing tendency for intermediaries, people who are supposed to be trusted advisors that intermediate between SARS and taxpayers. We have seen a tendency of bad and fraudulent practices by these intermediaries. Included in this are tax practitioners, business rescue practitioners, and liquidators, and we have successfully found some of them guilty of colluding with taxpayers, and you have also read about successful prosecutions and jail sentences that have been handed out. Criminal investigations has also profiled a number of high net worth individuals who enjoy a luxurious lifestyle, demonstrate unexplained wealth when compared to the income that they disclose to SARS. And so we are focusing significantly on that area of abuse. And we have the ability to access a number of databases that can supply details of high-ticket items that have bought, such as luxury cars and expensive property. And we do capital reconciliation back to the income statement, because as you know, very often these individuals, we find out more by their statements of assets and liabilities than their statement of income and expenses to truly understand their tax obligation. And we see significant discrepancies in this regard. In certain areas where the facts merit it, criminal prosecution is initiated. We've also observed during criminal investigation and other criminal behavior emerges from the evidence. So we may start with what we think is just a civil offense because of an underdeclaration of income, and that leads us to a criminal offense which we then prosecute. We have seen increase in syndicated activity involved in human trafficking or international money laundering. And clearly where this happens, we refer both internally and externally to other agencies to ensure a holistic response. Specifically in terms of litigation successes, I can report the following. We have seen an increase in taxpayers taking administrative points and general increase in litigation across all tax areas. On tax appeals involving the determination of a tax liability, we have seen a success rate of 92% of cases that are on appeal. On litigation involving the administration of tax, our success rate is 87%. And in customs and excise litigation, we have a little lower success rate and report 67%. We've also had successful outcomes in the Constitutional Court when it gets to aspects such as taxpayer confidentiality, because the confidentiality between taxpayers and SARS is sacrosanct to us doing our work, and we want to assure taxpayers that we honor this privileged information we have access to, and we will guard it with everything that the law allows us to do. In line with our previous focus on revenue recovery, therefore, if I take all of these examples I've shared with you, we can report to you that included in the 1.250 trillion rand that we announced today, there is a revenue component of 158.5 billion rand. This includes a year-on-year improvement of 26.8% on compliance cash collected, or 94.1 billion rand, as opposed to 74 last year, and a reduced revenue leakage through refund work that we do of a further 64 billion rand. Last year that number was 54 billion rand, and so an 18.8% improvement. So in total, the compliance efforts of SARS have resulted in an additional 158.5 billion rand in the year that we report. Let me give you a little bit of a sense of the year ahead before I conclude. Our compliance work will focus on a number of areas. The Davis Tax Committee work have been concluded. A report has been submitted to Minister Mboweni in December of 2020, and a number of these recommendations are in the process of being implemented, including a renewed focus on high-wealth individuals. I am pleased to announce that Judge Dennis Davis, who has retired at the end of 2020, will be spending more of his time with SARS. We have employed him on a more full-time basis so that he can help us implement many of the recommendations arising from the report. In the past, we often end up with a report with recommendations that is never implemented. This time, we want to follow through and ensure that these recommendations are implemented so that indeed the tax gap can be closed and the uncollected revenue can end up where it belongs, which is in the coffers of government. We will be making further announcements in this regard soon. In criminal and illicit economic activities, sadly we cannot anywhere closely declare victory. The problem is inordinate in our society. And this continues to be a huge area of concern for SARS. We have initiated work that will gain further traction as we increase our capability and capacity. And in the new financial year, that will have a renewed focus. But it's also important that you understand that for us to win the war on illicit trade and related criminal activities, we require a whole of government approach. And therefore, we continue to collaborate with other organs of state to ensure greater success in combating illicit trade and related activities. We also have renewed our relationship with other revenue and customs authorities around the world, because very often the fraud already commences offshore in collusion with importers, traders, or financial institutions or intermediaries that are offshore. On tax morality and compliance culture, which is important, we have seen in many aspects this reflects the state of compliance across the nation. So SARS is just a microcosm. If we have a law-abiding society, we will experience that more correlated in SARS. Where the South African public have lost confidence in the system of governance, they will also feel justified to withhold their taxes. And so this is hard work which we take seriously, and we will continue to build confidence between ourselves as the Revenue Authority and the South African public. In conclusion, therefore, it is an important moment and a checkpoint in the work we have begun to rebuild SARS and to improve the compliance relationship with companies and individuals. The integrity of SARS, the capability of SARS is central to this work. And we want to acknowledge not only the progress that we have made, but also taxpayers who have contributed to the work we do and to the revenue outcome we announce under very, very difficult circumstances. Actually, if we reflect on one of the most difficult years in recent times, we have produced one of the most favorable revenue outcomes under the current conditions. And we cannot do this without the tax-paying public, and we want to acknowledge them and thank them. Our combined efforts in achieving the result of 1.25 trillion rand are important for our country more than ever before in defining and transforming the lives of South Africans. The gogo in the village as well as the young unmarried mother, who often have many mouths and extended families to feed, would be destitute were it not for the fact that your tax money is the difference between them starving or having a decent meal and a roof over their head. The many frontline workers who have courageously and continue to bravely fight to protect us during this pandemic, to whom we owe an unqualified debt of gratitude. They are employed, they are supplied with the equipment and the facilities because of your tax money. Little boys and girls can go to school in decent facilities because of you. The ambitious infrastructure-led growth program of government, as well as the thousands of jobs it will create, are made possible because of the contribution from compliant taxpayers. We can therefore assure you that your tax matters. Thank you. I would like to specifically thank His Excellency President Ramaphosa for entrusting us with this privileged work, our Minister of Finance, Minister Mbuweni, and our Deputy Minister of Finance, Dr. David Masandu, along with our colleagues in National Treasury under the leadership of my colleague, DG Dondo Mohojane, the community of intermediaries with whom we work, with whom and through whom we work, the millions of taxpayers who make this result possible, and I pause for a special moment to thank the more than 12,000 hard-working men and women at SARS, to whom I give an unreserved expression of my appreciation, and I know I extend your appreciation to them, who continue to step up and join in this important work. We have a long way to go, but I can assure you we have a committed team at SARS who lead this work. A huge thank you to every single taxpayer and trader whose efforts to comply, whose tax contributions, and whose patience with us when we occasionally drop the ball. Thank you for bearing with us. Thank you to the media community who report and also help us tell the story of SARS and the importance of the work. I now conclude by wishing you a wonderful day further. Retain your distance, lock down, stay well, hamba gashli. It would be remiss of me not to thank our families and those who support us in this effort, and to many of you in the room, your significant others who help us and who free us to do the work we do, and our families who support us. Thank you very much. Remember, your tax matters.
Thank you, Commissioner. My name is Johnston Makubu, the Chief Revenue Officer. We will be moving over to question and answer sessions. There are some questions that have been given to us via the electronic channels, but there is going to also be an opportunity for us to take questions from the room. And I would perhaps ask that if you are in the room and you'd like to ask a question, that you introduce yourself by name and indicate which media institution you come from, and we will take your questions then accordingly. I will open the floor currently here in the room to pick up questions. Ma'am, you're on the floor.
Pranesh.
The preliminary revenue outcome has exceeded the February budget estimate. How is this going to affect Treasury's estimate for the budget deficit for the past fiscal year? Thank you.
Take other questions. There's a roving mic, so if you are asking a question, just wait until the roving mic gets to you. Thank you.
Yeah, Commissioner, John Fraser from ZA Confidential. You may have already announced this, but there was a barrage of information which you just gave out, so forgive me if I'm asking you to repeat what you've said. Is it possible to give us the numbers on the impact of the bans on alcohol and tobacco which were imposed during various phases of lockdown? How much revenue were you unable to collect because of what happened there?
Well, we have announced that already, but it's also in our statements that we'll produce, John. It was 14 billion specifically from tax from tobacco and alcohol, and the exercisable products in total 21 billion.
There is also a question from Commissioner. I don't know whether we want to just respond to the earlier question about
The budget deficit.
The budget deficit.
Yeah, and then if we can take three questions or so before we respond. Clearly, on the impact of the budget deficit, we now have a real outcome. So the numbers that the minister announced in February will be adjusted by the actual outcome, and then the next time the minister, in conjunction with the work with the Treasury, will be in October.
We've got a question that came via an email from Promit Mukherjee from Reuters, based in Johannesburg. He states that from what I can observe, is that the first time in several years that the tax base is made up of the upper class and middle class is expected to shrink in the year 21-22. From my observation, the tax base for the people who pay taxes between 750,000 to R1 million is expected to shrink by 1.12%, and 1 million rand to 1.5 million rand is expected to shrink by 13.1%, and 1 million and above is expected to shrink by 9.6%. Also, the data shows that the overall tax base is also shrinking. First time in at least 5 years, the request of the question claims the total tax base is expected to contract by almost 3% for 2021-22, from 7.1 million to 6.9 million. And this is especially because the number of people in the high tax paying category are falling sharply. These figures are available on page 48 of the full budget document. I want to know the following based on the data provided above. Number one, what is the reason for a huge expectation of a shrink of 13.1 in the tax base of those that are between the range 1 million and 1.5 million? What is the reason for yet another massive contraction, 9.6% of the tax base for people falling into the tax bracket 1.5 million and above? Is the shrinking tax base because of immigration of people from South Africa? If yes, then is there a data set which you can share to back that up? Or is it that many South Africans are seeing wealth erosion due to the pandemic, which is shrinking the tax base? These questions are for a story, and he goes on. I think it's quite a number of questions. We may have to just pause there a little.
Okay. Are there any other questions in the room before we go back to online questions? Fine. To the reporter from Reuters, I think I'm not going to provide a specific response to the very detailed nature of your questions from this platform. Suffice to say the following. One, the tax base is dynamic and constantly moving. As new jobs are created, jobs are lost, there's mobility upward and downward in the earnings of people. There is improved endowment effect of the compliance activity that we have, and there is continuous erosion of some of the tax base for various reasons, including people moving offshore, people retiring from the active work, etc. So it's a complicated dynamic, and we would be happy to sit offline to go through some of that dynamics. That's the first point I'd like to make. The second point I'd like to make is that if you look at any tax base in any country, let's be clear about one thing. The highest risk and the highest opportunity for non-compliance exists with corporates and wealthy individuals. And we are unapologetic at our focus on that. Having said that, we apply the law equally across the entire tax base without fear, without favor, and without prejudice. And so the extent of the tax we collect simply reflects the distribution of wealth across a society. And there, it sadly, in the case of South Africa, also reflects the high levels of structural inequality and inequity in our society. Those are broad responses to the question. Specifically, we would hold the same concerns when the tax base is eroded, or when people within the tax that ought to be in the tax base for some reason is not in the tax base. Some of the work we have shared with you by way of just examples in my announcement begins to suggest our renewed focus on those areas. Thank you.
The floor will still be open for further questions, or we'll take other questions online. And Commissioner, I think it's important to also state that we have responded to a parliamentary question by the Minister of Finance on this category above 750, and we indicated that we have not, for the tax year 2020-21, tax year 2020, seen a drop. In fact, we've seen a slight increase in those tax brackets. And I would invite the request that you just refer back to that parliamentary question and the responses thereto.
Thank you. I should introduce the gentleman who has just spoken. He is Mr. Johnston Makubu, and he is the Chief Revenue Officer, a new position we created just more than a year ago. So he is the gentleman who has just spoken, who joins me here on the podium.
We will take other questions if there are any other, or we'll go to the online questions if you can flight them. The second question is, and again, I must apologize, if I see a second bite, I'll pass on to another person so that we've got adequate coverage. Can you just spell out, this is from Funeko Toyana, economic correspondent from Reuters, South Africa, Southern African Bureau. Can you just spell out the trends in company taxes and which particular sectors contributed to the better collection? Can you give detail on what happened with illicit and illegal scrap metal exports over the period? What is the reason for the focus on high net worth individuals? Do you have a rand target for this sector? More questions after this. I think, Commissioner, I'll pause here. We can take these.
Thank you. I'm going to throw some of those questions back to you. Sure. So firstly, let me start with high net worth individuals. SARS is aware of increasing number of South Africans who have financial assets offshore in banks and financial institutions in other jurisdictions. We are an early adopter of a program for the automatic exchange of information or a request for information from some of these countries. With just about 90 countries, we have the automatic exchange of information protocol, and to others we can specifically request information. Through this, we are aware that South Africans have more than 400 billion of rand in offshore accounts. A few years ago, we initiated a special voluntary disclosure program, and from our response to that, just over 3,000 taxpayers who have responded, we were able to identify about 10% of that and collected just over 4 billion rand of additional taxes. But we think there is still a lot to be explained in that regard. So that's the one reason we focus on high net worth, on high wealth individuals. The second is the fact that wealthy individuals, as I said earlier on, their statement of assets and liabilities, their lifestyle often says more about the true nature of their income than what they disclose. And increasingly, we are modeling through information that we obtain from third parties, information providers, from asset registers such as NATIS or the Deeds Office. We are reconciling all of the data points we have around an individual and try to reconcile their true worth and therefore what the real extent of their tax liability ought to be. And again, these are generally not standard income earners. These are people who have wealth and either mask it through complex structures and arrangements, or who do not disclose it fully. So we have adequate reason, and it is confirmed by the work that was done with SARS and the Davis Tax Committee, that indeed that is a huge area of focus. So that's why we are focusing on this area. In terms of the company analysis, there is also a detailed report available that we submitted in response to a parliamentary question. So you're welcome to have access to that. But I'll ask Johnston to give you just a flavor of some of the things we see in general, and then in particular what happened in the last second half of this year, specifically in the mining sector.
So in general, for the trend, the CIT, the corporate income tax, has been slightly coming down over the years. And this has not only been experienced in the country or in South Africa, it's been seen even in other countries in the African continent, as well as other Latin American countries, according to the studies that we have done. So to answer the question around the trends, we've been seeing slight declines in corporate income taxes in the environment. And of course, I think that's why we then want to focus internationally on international taxes, which would manifest themselves in corporate income tax by and large. I think the request of the information is asking what is driving the performance in terms of corporate income tax. I think the Commissioner spoke earlier on about paragraph 19.3s that we've launched, particularly in the large business environment, which in the last 2 months alone contributed around 6.2 billion that our colleagues in the large business environment have been able to raise with large business clients. So that's compliance work that would be reported under the CIT environment. The mining sector, at the back of very strong PGM prices in the market, has also meant that majority of the mining entities have reported very strong profits. You would have noticed that in the month of December and subsequent, those that are listed in the JSE, that they've reported very good results. And that has then filtered through, particularly at the end of Q3, in terms of our corporate income taxes that we have seen. So mostly from the mining sector. But also I think it's important to state that we had thought that the finance sector was going to perform quite worse in terms of bad debts that they may have had to write down because of their clients coming under pressure. They did not have to write as much as we thought they were going to write down. And as a result, we saw better than expected results in terms of corporate income taxes. So those are two main ones, Commissioner, that I would like to just reflect on. Thank you.
Thank you. So if there are no further questions, I see there's a question from Hilary Joffe from the business. I think some of that has been answered. What drove the large CIT collections? What drove the extra PIT? We mentioned earlier that we have registered a large number of taxpayers who were formerly not registered. And so that is in the statement that we've issued today. So the detail is there. And I think we also focused on the particular sectors where the additional revenue came from. So I think Hilary's questions are largely answered, but if Hilary has any additional questions, she knows how to get hold of us. Thank you.
Yeah, there seems, Commissioner, to be no further questions from the colleagues on the floor or online. If there is no further question, then would like to release the Commissioner and release the House. There is expected to be media engagements outside the room, and you are invited if you've made a booking or an arrangement with the Commissioner to be able to take him through additional questions. We would then, if there is no further engagements, declare the session closed. Thank you very much for coming through, and we appreciate your presence. Thank you.
Thank you.